What's going on, everybody? So crazy day in the market yet again, right? I mean, yesterday really felt like for the first time in a long time, it really felt like it felt good. It felt good yesterday to trade. It felt like we could hold, trades longer than 2.5 seconds. There was follow through, levels were confirmed, and things sort of just continued to run. We obviously knew that we had the inflation data numbers coming out. Expected 7.2 on the inflation, came in at 7.5. So we initially seen what was going on in the pre-market. So, I'm Pacific Standard Time. So as soon as I woke up, I got on the screens and I started to, go through the numbers and look at the charts. A lot of things were starting to go red, a lot of things were selling off. And then, lo and behold, the bulls, they really stepped up and did a fantastic job. Um, Good initial washout, okay, on a lot of stocks, especially in the NASDAQ 100. Good initial washout, and then they were able to catch that bottom support. And when they caught that bottom support, it really gave us 1-2 hours of decent moves to the upside. I was able to catch a few things long. Did get caught a little bit late on the NASDAQ 100, but was able to flip my bias. Ended up finding a setup on Tesla to the short side, took that for a quick scalp down. Um, so with that being said, where are we at? What are we looking at here? What we're looking at here is the daily time frame on the Nasdaq 100. So the thing that concerns me, okay, as good as a job that the bulls did yesterday, gapping up over a little bit of supply, the 20-day moving average, and we closed right at this 200-day moving average, just a tick over, under, however you want to look at it. Um, and what I liked about this morning was that the bulls really showed, hey, you know what? We can absorb the bad news. We can absorb the inflation data. We can absorb this, and we're going to continue to march forward. So, what I was hoping for, and what, if you're a bull, what you're hoping for, if you're trading or holding to the long side, was to actually get back up over this 200-day moving average, which is a price of 366.86. If that was to happen, you were going to start to see a lot of stocks aggressively start getting pulled up over their levels of supply that we confirmed yesterday. Was going to set up for fantastic trading opportunities. But instead, what happened was is that we had a little bit of a pull down, then we had a little bit of, a rally, and then we would stall, and then we would pull down, and then we had a little bit of a rally again, and then we finally started to flush. And what I don't like here is that if I pull up my drawing tool here and we kind of look back, just the bigger picture here going all the way back to December. So we kind of got this first leg down here, and then we got a 3-day rally. Then we got our second leg down here, and then we got a 4-day rally. So when we really came into this area last week, it was, to say the least, it was hell, especially to try to pick a direction. This was in clear distribution. We didn't know if we were going to break down to the short side. We didn't know if we were going to break out to the long side. And it really made price action very, very hard to, kind of maneuver through, right? It was kind of hard to find a bias. So when we gapped up yesterday and we closed at the high of day, literally at the 200-day moving average, the bulls did a great job. Next stop was going to be 369 and 372, and then we could really start pushing towards this 50-day moving average, where things would really start to really light up. And with that CPI data, it's still hard to say if the market has already been priced in. Are these lows going to be our lows, or are we looking at just a little bit of a pullback, consolidation, dead cat bounce? However, we do not make a new high here, and we keep continuing to make these lower highs, lower highs, lower highs. So what I don't like about today is that if the bulls continue to stay weak today, okay, and you can see now here live, we have a very, very long wick here, ton of buyers trapped in this area. So what it looks like right now is that, that good rally that we had was a complete trap. They completely trapped everyone into the 200-day moving average, immediately flushed us down, and we're on the verge of losing the 5 and 10-day moving average here. Okay, so if we do start to lose this area here in this exact price, if I could just give it to you, if we start to lose today's lows, 358.84, right in that area, this is going to be a complete disaster from a trading standpoint. just due to the fact that it's going to put us back in this chop zone, back in this distribution phase, and we have a lot of room down. So if we look at the max potential here, so if you are trying to catch a play to the short side, we potentially have room to down to 351, 352. So currently where we're sitting at, we're at 360. That is an 8-point range down to the downside, but you're not going to expect that, at least you wouldn't expect that to just be one straight shot down. We might come down and then look like we want to bounce, and then we might come down and then bring it all back, and then just continuously chop around back inside this zone. So, you know, the question is are we going to get a third leg down, which would be a true bear market overall market correction? We got pretty close down here. NASDAQ 100 was down about 18%. Technical bear market is 20%. So if we kind of look at the first leg down here, we got a rally. Second leg down here, we got a rally. This is pretty much just distribution in anticipation for what was going to happen today on the CPI numbers. And being that we did not break out and make a new high here, we could essentially be looking at a third leg down. And this would really turn us into a bear market. You would see a lot of stocks fall even more than what they were. So I'm not putting this out there to scare anyone. I'm not a bull nor a bear. I just, I'm a realist. I try to trade both sides of the market. I stay very, very cash flow heavy. I'm not a long-term investor, so I'm able to take advantage of the intraday moves, whether that be to the long side or the upside. But I mean, let's all be honest, the sun shines a little bit brighter when, stocks are going higher, right? People have a little bit more of a glow when things are going higher. It seems like the sun is a lot hotter when things are going higher. And it seems like when we are going down, yes, there is money to be made, but it's just, there's a lot more panic. There's a lot more fear. There's a lot more chop. And it's just really hard to get a clear sense of direction. You don't really want to, it's hard to just throw on a swing to the short side here and just, ride it straight down. It's like you get faked out here and then it comes back down. And then we consolidate and we think we're going higher and then it comes back down. So it's a very, very tricky market to navigate, especially when we're in a bear market or any type of pullback, especially for newer traders. I just want to kind of hop on here and give you guys a couple of those levels. So obviously the big level in the sand, I don't know if we're going to be able to do it today. 366.86, that would be confirming the 200-day moving average. Bulls absolutely would need to get over this. I mean, before we think about swing trading things to the long side, before we think about holding things overnight for a week, 2 weeks, we have to get over the 200. If we are not over the 200, all you are really doing is just setting yourself up for a lot of choppiness, for potential shakeouts, and for potential loss of money just due to the fact that underneath the 200-day moving average, the sellers still have control. If we are looking for some sort of scalp to the short side, 358.71, we are going to have room, like I said, down here to 352, 353. But anything really below 350, okay? Below 350, it would be foolish not to think that we don't come back into this demand zone. It would be foolish to think that we don't test 335, 340. This would be a big macro trade to the downside. So you would want to look for stocks setting up as soon as the triple Qs lose that 350 zone. This is when you're going to really want to maybe put on a 1-2 day swing to the short side, allow it to chop around a little bit because we know that the overall, the weight on our shoulders is going down. Right now, we're still kind of, coming off the top of the range. So here's the top of the range, which is a 200-day moving average. Here's the bottom of this range here. We would really have to lose the bottom of this range before I feel comfortable holding short positions longer than, just an intraday scalp. And then to the long side, I really don't want to just say, hey, we pulled back here, but we're going to come back up because, we could easily chop around. You start to get happy here, and then the market just does this. So, tough trading environment right now. You really, cannot have a bias going into the day. You kind of just have to be agile and be able to take the market for what it is. And if you don't find your setup on your particular strategy, then hey, you know what, live to trade another day rather than trying to force a trade. Guys, if you like this video, please do me a favor, subscribe to my channel. Also join my Discord. That link is down in the description box below. Give me a thumbs up and I will see you guys all on the next trading video.